Right. Last week we discussed VAT on financial services, and then today we are moving to SVAT. Basically, VAT on financial services. We discussed theory part. We are going to discuss the calculation soon after we meet physically, or else if it is not so, we will do the separate session for the calculation part, income tax and the VAT. So here today we are going to discuss SVAT, Simplified Value Added Tax. Under this, and also we are going to discuss VAT admin part also. Under your learning outcome. Today we are here compute the VAT liability of registered identified purchaser, that means RIP, and the registered identified supplier, and the significant features of SVAT scheme. So basically we will go through with these things. First of all, the introduction is basically SVAT came into effect with effective from 1st of April 2011 onward. The SVAT introduced because of basically to eliminate the refund process. Basically, I will let you know. I'll explain next three slides because how the refund is came. Basically, as you all aware, the exporter may be zero rated. Exporter, as per the VAT law, zero rated, and that exporter need to obtain purchase from the VAT registered person or the some other person. They might have purchases, then they pay VAT on that purchases, but output is zero, then definitely they will end up with refund. I'll share the screen. Before moving to that, I will share the whiteboard with you, how the refund is coming from export. Basically, exporter, they have sales, supplies. We call it as basically as per the section 7 of the VAT Act, zero rated supplies, because exporter. Then if they have value 100, then the VAT rate is 0%. Then they will end up with nothing. No any output tax because it is zero rated. Then here output tax. Then the input, in the case of input, they are normally purchased from local, or the if it is import, then it is anyway deferred. Import, if exporter is going to import, they can go for deferment facility. Then I am not going to include that. For the simplification purpose, I will do the local purchase here. Local purchase. If they have local purchase, then definitely let's say they have purchased 100 million as exporter, then they will definitely pay VAT on purchase 8%. Then their input may be 8 million. Then finally they will end up with balance payable or refund due. That payable or else refund due. Then in this case, you can see there is a refund because their output is zero rated. Then input is the purchases they have to purchase on VAT. Then every exporter in this model, the VAT law, they will end up with refund situation. That is why then, in order to avoid this refund situation, because if you declare return, if you declare any refund in the VAT return, then definitely you have to collect the refund from IRD. It is tedious process. In order to claim the refund from IRD, it is very difficult. It will take 2, 3, 5 years maximum to get the refund from IRD, because as you all aware, VAT fraud we had Sri Lanka, then that is why they are highly monitoring refund situation. And also, even if it is their refund, they will not issue a refund quickly. That's why, in order to eliminate the refund process, they introduce SVAT system. How SVAT system is work, because of this refund, how in order to avoid the refund situation. This is before SVAT system. Then soon after they implement the SVAT system, they introduce SVAT. Then soon after they introduce SVAT, whatever the purchases, those exporters, let's say mainly exporter, they purchase under SVAT terms. Then whatever the purchase they made, they did purchase under SVAT scheme, SVAT purchases. Then they didn't pay any VAT because it is suspended as per the SVAT regulation. Then they will not end up, because they will issue a credit voucher. Then there won't be any SVAT payment, because they will purchase at 100, they will issue credit voucher, there is no any payment. In that case, they will end up with 0. Because this is anyway we are discussing the slides. I just explain here you to understand how refund came. So let's move to the slide again. Here basically it's explain about SVAT system and also the eliminate the SVAT refund situation. Basically exporters, zero rate suppliers, then they can make they can register as RIP. Exporter, normally they can register as RIP. How they are registered as RIP? As per the law, in the gazette notification issued, recent gazette notification, it is 2016. The previous, there was some gazette notification, it is no more valid, with effective from 1st January 2016 onward. This is the gazette notification you are required to refer. There are 2 SVAT gazette notification. I noted that some a student is still referring the previous gazette notification. This is the gazette notification you need to refer in order to get understanding of SVAT scheme. So here, the exporters, not only exporters, there are some other persons also eligible to register as RIP. We will discuss a little later. In the explanation purpose, introduction repair, we have included here the RIP. Basically, if they have export zero rated supply, then they will end up with refund. In order to eliminate the refund process, they introduce a SVAT system. That is the main story. So basically objective of introducing a SVAT scheme is these are, because to solve the cash flow problem, basically, because exporters, they will end up with refund. Finally they have to come up, they have to submit the request to the inland department in order to get the refund, because then the refund they will issue it, IRD will take time to issue the refund. Therefore they have cash flow problem. They have cash flow problem. That is why they introduce refund. Then they can purchase without paying VAT. They need to only issue the credit voucher. Then the mainly exporters or the deemed exporters, strategic development project and also special project, they can register as RIP, and they can purchase under suspended terms without paying VAT. They can purchase, and they are going to issue only the credit voucher, right, to solve the cash flow problem. Then they are not paying any more VAT. So then the second thing is to reduce the difficulties obtaining refund, because you know how difficult, how hard to obtain refund from IRD. So then next thing is to reduce workload in the point of IRD officers, because they have to do massive verification, the bank statement and the SVAT original invoice, they need to verify, and the return schedules and certain approval they have to obtain. Then the workload also, they are now, their workload has been reduced due to SVAT system. If it is SVAT call it as simplified, but it is simplified. It will take time to understand and follow the process. It is little bit administrative tasks are more than normal web process, but it is very useful mainly exporters, because in the past government they also proposed to remove the SVAT scheme. Then again exporters they join together and make a request, don't remove the SVAT, because if it is remove the SVAT, they know that how harder to get refund from IRD. Therefore they uh, request to keep the SVAT system as it is. Then that is why SVAT system is still functioning. And again to eliminate fraud, because earlier the refund came, because as you aware, we had Sri Lanka, I think in Asia, we Sri Lankan, they made big fraud, VAT fraud in Sri Lanka due to this refund system. Normally they create dummy invoices, not actual invoices. They create dummy company and they registered normally they registered for VAT, and they issue a not actual invoice. They create a dummy invoices in order to claim refund. Then the department party and all other suppliers and purchasers get together and claim a refund and get from IRD the massive cash they get from IRD as a refund. That the fraud they made. That is why department is not going to issue any refund, and also they moved to the SVAT system because of that reason. And we'll see who are the registered identified. Basically, we know that there are two persons under SVAT scheme. One is registered identified supplier, person who supplies goods to RIP, registered identified purchaser. So, registered identified purchaser is facility is given to certain identified persons to purchase goods and services without collecting VAT. Without collecting VAT. So they are supplying without collecting VAT. Let's say if it is 100 and suspended VAT amount is 8, you issue in invoice 100 and they are not collecting VAT. And then in the case of purchaser point of view, if it is, see this person, SVAT registered identified purchaser is basically facility given to certain identified person to purchase goods and services without VAT. They are purchasing from RISS, then they are paying only 100. They will pay only 100 because they will not pay. They will purchase, they will issue a SVAT, they will issue 100 and VAT is 8, and they will pay only 100 and they will issue a credit voucher for 8. They will issue a credit voucher for 8. So this is we will explain later in the slide. Then next slide we are going to discuss who are the person actually, how who can be registered as RIP, registered identified purchaser, and the registered identified supplier. Who can be the registered identified supplier? Who can be the registered identified purchaser? Because these things are very important since the SVAT process implemented. Who can register as a RIP? Because as you know, if anyone get refund situation, under this VAT scheme, they are now eligible to register under SVAT scheme, because then only they can avoid refund situation. So in that case, they introduce SVAT scheme, basically mainly any exporter or provider of zero rated services. the mainly goods and services, basically exporter. Then if their supply exceed 50% of total supply, just assume they have 100 million, they need to make 100 million turnover sales, then they need to at least exceed the 50% total export out of total supplies, total sales. They need to exceed 50%. That means, let's say, as 80 million or 60 million, if they exceed 50% of the total supply, then they are eligible to register as RIP, any exporter who exceed 50% of the total supply. Then the second one, indirect exporter, we call it as DM exporter, basically goods. DM exporter, any manufacturer who supplies goods to exporter to be utilized for manufacture of goods to be export. Then the manufacturer, they supply goods to the exporter who are going to export. Then the manufacturer, if they are supplying more than 50%, if they are supplying more than 50%, they also eligible to register as a RIP, right? Then the next person is supplies to any SDP. SDP means strategic development project. SDP, any supplier who supply to SDP. Then in that case also, then any registered person who supply goods and services to SDP, basically during the project implementation period. If it is more than 50%, if it is more than 50% of the total supply, then that supplier also are eligible to register as RIP. So then the fourth one, during the project implementation period, I'll explain later the project implementation, what is the project implementation means. And then the special project. If a special project, any person who registered under VAT law and engaged in a specific project, then the specific projects are normally government categorize that project if it is specific or the strategic development. Then the government, they need to obtain the government or finance ministry or the relevant ministry's approval to become as a specific project. Then only they are eligible to go for SVAT as a RIP. Then 22.7, section 22.7 and SDP. Then here also will explain any registered person under 22.7 including SDP. During the project implementation period, they also eligible to register as a RIP. Here the project implementation, again repeating, the project implementation, I will quickly explain how the project implementation period and the 22.7. Here the project implementation period is basically, let's assume if the normally 22.7 registration also came because there are businesses. Because before making operation, normal commercial operation, they have to build. Let's assume a hotel they are going to build in Colombo, right? Then under construction state, they will not make any taxable supply. They have only the purchase. Then they 2 years period, they are just assume the recent hotel, they are constructing the Welcome Hotel in Colombo. Then the big hotel they are constructing until this time on, until 2 years or 3 years, maybe they don't have any taxable supply. They do only the construction, right? Then we call it as, that period is project implementation period. Normally they have only purchases in this period. They have only purchase. Then we call it as project implementation, the construction stage. Right? They have implementation period. This period, they have only purchase because they are constructing. Then when they are doing purchases, they will definitely pay. When they are purchasing, they have to anyway purchase from VAT registered persons. Then they will pay 100 and also they have to pay VAT. Then altogether 108. Then this 8 also cost for them. Then they have to pay VAT. Then they don't have any sales for this period. Then later they will start sales. Later they will start sales until such time they have to purchase with VAT. It will anyway get refunded if they do not register for SVAT. Then this period they do not have any taxable supply. If they registered for VAT, they have to purchase under SVAT. Sales, they don't have any sales. And purchases, they have to pay VAT 8. Then again, they will end up with refund. Refund, again 8 million. Right? Then, in order to avoid this, each person also can be registered as RIP and they can purchase under suspended term as RIP. Then they are not going to pay VAT anymore. They will purchase under RIP as RIP from RISS. So then soon after they make taxable supply, they need to communicate to the department. Then they will cancel their SVAT registration. Then they will make taxable supply. Then they have sales. Then the department will cancel the VAT registration. Then they have sale, let's say 100, and they pay VAT. They collect VAT, and in their purchases also they will purchase and they have VAT 8. Then finally no any payable. Finally there is no any payable. The SVAT they will cancel soon after they start commercial operation. This is the starting point of commercial operation. They start commercial operation. Right? Then this period is very important for you because this period they need to register for SVAT because otherwise they have to incur or they have to purchase with VAT cost, because if they not registered then anyway they that 8 million will cost for them. Therefore they are willing to register and they can register under 227 and they will purchase under they will register for SVAT and they will purchase all the purchases under SVAT terms and they will not pay VAT. They will issue credit voucher. Right? This is very important in case of the any business or the project. If you are going to implement in Sri Lanka, then they are eligible to register for under 227 registration, and also they are eligible to register for SVAT scheme. And then I'm sharing the slide again. During the project implementation period is now you got the point. Then again we discuss in this slide number 6, We discuss 5 people, those who can register as RIP. Then next slide, the 6 and 7. We have beam exporter, indirect exporter, who service provider. Provider, if that supply, if that such person, if they supply more than 50% to deem to exporter, the any company, service providing company who supply service to exporter. Then it is conditioned that quality and character on the value of the goods manufactured for export. Then if the supply made by service provider, if it is exceed 50% of his total supply, then the service provider, let's say service provider, they have 100 million, then out of 100 million, they need to make supply more than 50% to this exporter, right? Then they are also eligible for SVAT scheme. Then finally, the 7, the supply to above persons. Any person who are supplying to above person, if the supply is more than 50%, then again that person also eligible to register for SVAT. I will explain in the whiteboard again quickly. The SVAT scenario. Here there are 2 persons. First one is let's say company A, company B. Then basically first scenario, B will do the export. This is world market. World market. Then any person let's say he is supplying goods to B. Let's say goods they are supplying to B, and B is supplying to the world market. Then B is become exporter, right? B is automatically will become exporter. Then they will become exporter. He exports. Then his supply, as per the VAT law, may be 0 rate. Then this B, company B, are now eligible to register as a RIP. Right? Then A is supplying to B. As A is supplying to B. Then if they are supply, this is first one. First condition to become RIP is the first Roman one we discussed. The first scenario. The first scenario is basically person who doing export, right? RIP. Then any person who supply goods, then he supply goods. Let's say supply goods. Let's say more than 50%. Then assume he has total sales. Let's say 100 million. Then 100 million, if they have 100 million, They supply 60. Then they supply goods. They supply, just assume 60 million worth of goods during that quarter. 60 million goods. Then this person also can be registered as an RIP. And again, any person who supply, let's say A, he is a service provider. A is supply, let's say 60 million again, supply of services to export. Just export more than 50%. Then in this case also, this person is eligible to register as a RIP. That is another scenario. Right? And then this person also can register as RIP. Right? Then let's 60 let me you to understand clearly. Supply of services is more than 50 million. And right, this person also can register as RIP, and this person also eligible to register as RIP. Right. Then we discuss 3 persons up to now. First one is zero rated supplier, and then the deemed exporter goods. Then the it is Roman 2, and the Roman 6 as per the tube. 2 and 6 also shared in the screen. Here this is 2 as per the slide. RIP, this is 6. Right, then the third one is supply to any SDP. SDP supply, then this specific project, and the 227 and SDP. These are different scenarios. Then any person who makes supplies to SDP, then they also can register as a RIP. Let me share in this screen itself. I'll draw that scenario also. Here, let's assume this person as SDP C. This is C. They registered under SDP, Strategic Development Project, under Strategic Development Project Act. Development Act. Then they registered as SDP, and then this A is, let's assume A is making supply to this SDP. Then if they are making supply more than 50%, again this more than 50%, supply goods or services to SDP more than 50%, then again this person can register as a RIP. This is third scenario. Supply goods and services. This is third scenario. Then the next one is, let's see any special project. Any person who engage in special project, specific project, then that person also eligible to register as RI. Then let's here we will draw the D, person D as SDP, sorry, specific project, right? A specific project. Then if they registered as a specific project, then they also eligible to get RIP status. Let's see this 4, Roman 4 in the slide we discussed. Again, you can get RIP status as a. Then any person who registered under 22.7 or SDP also during the project implementation period, that person also eligible to register as RIP. In that case, this is the file. This person can also be registered as RIP. Then again, anyone who is doing registered under 22.7. Anyone who is registered under 22.7, right? Anyone who registered under 22.7. Let's see this person. He has a E, ABCD E. They have registered under 22.7. That means project implementation period. They don't have any supply. They registered that period. They registered as RI under SVAT scheme and obtain RIP status. They can obtain RIP status. Then this is the case where they can obtain RIP also. In this case, they can obtain RIP. Then this is, as per the slide, the fifth one, the 2 cases in the fifth, as per the Gazette, because I'm here discussing the Gazette relevant to the Gazette notification. I will share the Gazette notification because we have already shared. I think it is in the your portal. You can download the Gazette. This person also can be registered as RIP. Then the last person, any person who supply more than 50% to any one of this, then that person also eligible to register as a RIP. Let me explain. Then here, this is the, then let's park it here. This is, then any person who is doing supply I think it is, we'll call it as D. That person also can be registered as a supply to all supply to A2 A2 E. Then this person also can be registered as a RIP. This is 7. RIP. Then we'll see the persons who can register as RIP, how they are supplying, let's say, to SDP, or this one, to this one, or to this one, or to this one, right? Then, if it is more than 50%, if it is more than 50%, then that person also eligible to register as a supplies. Let's see the supplies again, more than 50%. Then it is common for here. This one apply to here. Then these are the 7 cases there in one picture. Persons who can register as RIP. Then who can register as RIS is one important thing. Who can register as a RIS? Now you know who can register as a RIP. Then who can register as RIS? Anyone here? Can you tell me who can register as a RIS? Here we share in the 1 to 5 we discuss as RIP, and again 6 and 7. Then the RIS is easy task. Any person, any registered person, any VAT registered person who supplies to RIP can obtain RIS. It is easy. Then any person who is supplying to RIP can get RIS. Then the above 7%, if anyone, if your company, you are supplying to RIP, then you are eligible to get RIS, because RI is the key person in the SVAT point of view, because they will make refund, then avoid refund, they have registered as RIP. Then anyone who supply, because in order to avoid the refund situation, we are supplying to them, then we also eligible to register as a RIS. If you have single supply, single purchaser as RIP, then you can register as a RIS, no matter. Right? It is easy to get RIS status, but RIP, practically, RIP status, in order to get RIP status, it is little difficult. So you have to prove the facts. So then, 22.7, the project implementation period, I explained already. Here also, for your reading purpose included, the commence a new enterprises. Any person who are going to commence new enterprises, basically commence business or project in Sri Lanka. They are going to undertake any project. Then that should be satisfied the Commissioner General. You are going to have construction, then that project implementation period, you will not make any taxable supply. You have to make only purchases. Then later you will make taxable supply. Then subject to that, you will make within 30 months. You will make taxable supply. By that guarantee, you can register for under 22.7 and you are eligible to register SVAT, right? Then within 30 months from the commencement of such operation, he may register VAT, and also he is entitled to claim input tax. Then since he entitled to claim input, then again they will end up with refund. Then in this case, they are again required to register as a under SVAT scheme as a RIP, right? Then this is the 27 during the project implementation I explained. Then again, let's assume if you couldn't make any taxable supply within 30 months, then you can prove that if Commissioner General satisfied, he may extend the time 30 months. He may extend, and until such time you can enjoy under SVAT facility, you can purchase under SVAT terms without paying VAT. Later, once you make taxable supply, you have to inform to the Environment Department. Then they will cancel 27 registration, and you will they will transfer to the normal VAT scheme. Right. This is the SVAT process. Basically, I would like to highlight. You will then assume here RIS. Then here it is RIP. Then you are making supplies to RIP, from RIP to RIS. Then you are required to issue a SVAT invoice. At the same time, you are required to update the system, the RAMIS. RAMIS, you have to update the RAMIS, that is Revenue Administration and Management Information System. It is IRD system. Then you need to enter that invoice to the online system, IRD system. Soon after you make SVAT supply. That means, let's say January you have 10 SVAT supplies, then February month, before 15 days, you need to update the system by entering all the SVAT invoices. Then later, RIP will issue a credit voucher. On that suspended supplies, whatever the invoices they get. Then the same time, they will approve in the SVAT system, that is RAMIS system. They will approve by allocating the credit voucher number. But they will approve the same in the by allocating their credit voucher number, and then you will also can see as RIS, they also can see whether they have approved the SVAT for, and this person also, the soon after RIS entered into the system SVAT 4, they also require to see the system and approve within 20 days. Let's assume January month they are dealing with. In the case of January, they will issue February within 15 days. As per the law, it is 15 days, within 15 days. Then the practically they will take some time. Normally they will take wait until the end of the month. Then they will enter all the suspended supply, their sales under SVAT terms. They will enter in the system. Then the RIP also within 20 days, they are required to approve through the system by allocating credit voucher number. Then the RIPs, they will get credit voucher from IRD. IRD, they will collect 50 credit voucher, or based on their previous transaction, department sometimes will issue 100 credit voucher or else 150, depending on the company transactions. So then based on their credit vouchers available, then they will allocate credit voucher for each supplier separately. Let's assume we have 10 suppliers. Then let's say one supplier issue 5 invoice to you. Then all 5 they will enter as once. At once, then you issue 1 credit voucher for one supplier. You will issue 1 credit voucher for one supplier for 1 month. Right? This is normal SVAT process. Then what is SVAT invoice? SVAT invoice is mainly, as I explained, RIS is issuing to RIP. We call it as suspended tax invoice. Then the VAT portion, they are required to show it as suspended VAT, suspended value-added tax, because it is, you are not going to pay VAT amount. That is, so we'll see the sample format of SVAT credit voucher specified by IRD. This is the SVAT invoice sample format. We call it as SVAT 2. Then they are required to mention here suspended VAT is 8% because it is suspended. You are not going to pay. This one is issued, normally issued from RIP to, sorry, RIS to RIP. Then RIS, supplier details. Supplier, they will enter SVAT number, registration number, and the VAT registration number, invoice, date of invoice, invoice number. And the supplies to the purchaser detail, purchaser RIP, registration number, name, and the ISR number and address. They will enter this detail and issue. This is SVAT 2, the normal physical invoice format. Then again, the same time, soon this is the sample format of credit voucher. Credit voucher, I'll come back to credit voucher. Before that, I will explain this online SVAT also. The one, let's assume the company soon after they issue the physical invoice, they are required to enter after lapse of that month. That means January, soon after January finished, in the February month, they need to enter that supply, that sale in the system. We call it as SVAT 4. Here also goods and service declaration under SVAT scheme SVAT 4. This is one of particular month. Let's say here the example is 2019 August month. In this case, the supplier need to enter RIP, purchaser team, purchaser SVAT number, and you need to, soon after enter these figures, you need to click on here to see whether we have entered correct person. Then system will appear, this is ABC, and their email address and contact detail also. Then you need to tick the normal tax suspended supply term, because you are not going to supply non-foreign exchange, because this is mainly related to the government apparel sector. This is the area you need to fill. You need to credit voucher number as RIS. You are not required to enter. You are required to enter the whatever the invoice amount. Let's say 100. And if you have credit note and debit note, that means increase the amount or decrease the amount. Credit note or debit note amounts you also can enter here. And the balance, then the suspended VAT amount, and the number of invoices issued for that particular month. If you have issued 10 invoices, you can mention 10. The total 10 value, total value of 10 invoices you are required to enter here. Then the purchaser will approve. Purchaser will approve. This is the approver point of view. Approver will see this detail: RIS PIN, RIS SVAT number, RIS name, RIS email address, RIS contact number. Then the supplier will see that this is the value. Then they need to enter here also the same value. Then the VAT amount. Then 10 invoices. They realize that all 10 invoices they have entered. If they satisfied, RIP can allocate the SVAT credit voucher number here. Then they allocate the credit voucher number, and then RIP can approve the same. By allocating credit voucher number. If he is not satisfied, he can, let's say in the previous here, they have made supplies, they have purchased 5.8 million. Then RIP realized that not the 5.8 million, it should be 4.8 million. Then error, if there's an error, he can reject incorrect amount. He can reject, and they need to select the proper selection here under drop down list, and then he can reject again. It will goes to the RIS. This is normal SVAT approval process. Then what is the credit voucher? Because they are going to enter here the credit voucher. Then what is the credit voucher in the SVAT term? Then the SVAT credit voucher sample format is here. Then this is the physical SVAT credit voucher number. This is the number they are required to enter into the system. By mentioning in front of this number CRV, they are required to enter the system. Then these serial numbers are only for one person. It's number sequence serials. The IRD system is allocated only one person up to 50 or 100 or 150. Then this number no one can't use again. If RIP just put a random number by thinking any number, then they can't approve the SVAT. Because this number you have to visit to IRD, and if you qualify to register as RIP, then only IRD will issue credit vouchers. Then only you can purchase. Even you purchase, you have to get access to the system, and then you can make this purchases under SVAT terms. Then you can approve by allocating this physical number to the system, right? This is, and then SVAT credit voucher book you will receive, let's say 50 vouchers book. Then each voucher there are 3 copies. First one is customer copy, who normally supplier. Then the taxpayer copy is RIP, your copy. Then the office copy, that is IRD office copy, that is pin color. If you have seen, the white color is for the customer RIS, the green color is one for your documentation purpose. This documentations you need to keep as per the VAT regulation 5 years. And then IRD copy you need to submit to IRD soon after finish this book. Then pink color copies you need to combine all together 50 or 100 based on you have. Then you need to submit to the department in order to get next credit voucher book, right? Then this SVAT for an approval process we discuss. Then you know that SVAT how is going SVAT things. Then I would like to highlight the computation, VAT computation of exporter, the before registration of SVAT, before registration, SVAT registration, because VAT application before SVAT is key. If it is exporter, then you can see this table. They have, because I explained from the beginning also, zero rated supply. They have. If this exporter, their supply is zero rated, because the why zero rated is given, basically why I discussed from the beginning, zero rated, because in order to compete with foreign market, if you are going to supply to export, if you are going to export, then our goods should be less amount when compared with the world market. In order to compete with the world competitors, then if you impose that, then definitely our cost will be higher. That is why in order to gain foreign currency, also government encourage exporters. They have made that as a policy as a zero rated for exporters. Then their VAT amount is zero. Then they definitely make purchases. If it is import, anyway, as per the VAT law, they are not going to pay VAT. It is deferred in the point of import. At the point of importation, then they are required to obtain credit voucher from IRD, and they are not required to pay VAT on importation also. Let's forget about import here. Focus the local purchase. if you have purchases locally, then again you will end up with refund situation. Then you are allowed to claim this 16 million since it is zero rated. Zero rated. If it is exempt supply, you cannot claim. Since it is zero rated, you can claim this input. Then finally you will end up with refund situation. Then it is, you know how harder to get refund from IRD. It will take time. Even you can't. Finally you will end up with no amount of refund. So therefore, they introduced SVAT system. Soon after, they registered as RIS, RIP under SVAT scheme. Then they will make supplies as zero rated. Then import is anyway differ. Then they will purchase all the purchase under SVAT term because they are not going to pay VAT since this is suspended. Then they will not pay VAT. This suspended. Then the balance payable or the refund due will end up with zero. Then there is no any refund under this scheme. Then here VAT application after SVAT scheme as RIS. Earlier previous slide we discussed RIP. Here the RIP. Then this slide is explain the VAT computation of RIS. In the case of if you are supplying to RIP, you are normally, if you are supplying any, in even single supply, if you are making to RIP, then you are eligible to register as RIS. Then you may have taxable supply and also you have VAT suspended taxable supply. Then the VAT suspended taxable supply, keep wording the 100, let's say 8, then the VAT amount is there, the 8 million, then altogether 24 million. Then they have purchases, then they have VAT amount and also SVAT, sorry, the purchase amount, the purchase, local purchase. Then they have purchase under normal VAT term and they are eligible to claim this one. And there is a balance payment. By netting off this output against input, then you will end up with 8 million. Because then this 8 million you can see here that you have suspended supply. Then anyway, if you supply to RIP will issue credit voucher. Then those credit vouchers you are entitled to deduct 8 million. This 8 million you are entitled to deduct. Then you can deduct that 8 million. Then there is no any payable or refund in this scenario. This is suspended supply, how you are going to record. This is basically whatever the supply you made, the administrative part as a SVAT registered person, you will definitely get a SVAT credit voucher. Normally if it is received, normally in practically you will not receive the physical one. Normally as per the law you have to collect anyway, but you can see whether it is approved or not in the system. The system will approve. You can see whether it is approved your SVAT or not, right? Then this is RIS scenario. Then the regulation issued under SVAT scheme also I would like to highlight. The regulation, basically as I mentioned from the beginning also, you need to refer the Gazette notification, the reason 1, 2016. It is effective from 1st January 2016 onward. This is the Gazette notification number. Then in this, they specify the guideline to operate SVAT scheme. Then the previous Gazette, if you still referring the previous Gazette notification, which is dated April 16, 2015, it is no more valid with effective from 1st January 2016 onward. Then this is the gazette notification, and here the summary. If you register as RIS, then these are the compliance you need to do. What? First one, they are anyway bound for monthly compliance. Monthly compliance, they are required to issue SVAT 2 is SVAT invoice. Then the SVAT 4, SVAT 4, SVAT 4 is basically they are required to enter to the online system. Then online means RAMIS. Summary of SVAT invoices, RIP wise. Because RIP, each RIP you need to enter each SVAT for supply wise. Let's say supply you made supplies to Mr. ABC company. Let's say ABC company you made supply. Then you will issue one. Then again, if you made supplies to a B, then again you will issue. You will again issue another SVAT 4 to B. XYZ company, let's say. Likewise. Kalana is asking a question. What happens if input is 17? Yeah, I'll go back to Kalana in the slide 17 you are referring, right? I think is this slide are you referring? Kalana? Okay, 19. Right. Input, let's say they have purchases 16 million inputs, right? Then they will set off this input 16 million out of this 16 output. If I put a line highlight here, they will set off this input against this part. Because anyway, if you even sing individually, you are not required to set off. Anyway, your output is, you need to see it like this. 24 you have output and you have 16 inputs. Then you, after deducting this 16, you will end up with 8. Then you know that you have credit voucher. It is, you receive the credit voucher 8 million, you can deduct. Right? You can deduct that because the 8 million you are not required to pay anyway, since the RIP has already approved. RIP has already approved. You can deduct that 8 million. 16 million is the one here is referring. 16 million. 16 million anyway. The taxable supply they are deducting. If you, let's assume if you don't have taxable supply, then you have only, let's assume you have only suspended supply 8 million, then you need to definitely, they have to issue a credit voucher, and then you can deduct 8 million out of this supply. If, out of this supply, then definitely you will end up with, by having the credit voucher, they can set off the credit voucher out of this. Forget about the taxable supply. If there is a taxable supply, and if they don't have suspended supply, they have to pay 16 million. Then the 16 million they have to pay if they don't have input. The SVAT, anyway, the benefit is nothing to pay. If they approved, RIP required to approve anyway. If RIP approved, you are not required to pay any amount to the IRB. Hope Kalan, you understood the. If you understood, you can just put a message. If not, I'll explain in the whiteboard. Is it clear? Right. Then we'll move to slide number 21 again. Then RISs are required to issue SVAT 4 in the system. Then it is required to issue within 15 days. Keep in mind, within 15, as per the law, within 15 days, end of any calendar month. End of any calendar month. Let's say January, they are required to issue within 15 days, means February 15. Practically, it is not happening, but 15 days requirement is there as per the Gazette. Right? Then the RIS have more burden again. They have to submit schedule 5, 5A, 5B based on the invoices, right? If there is a credit note and debit note, 5A and 5B refers to credit note and debit note. Then the 5 is invoice, basically invoice wise, they have to declare in the separate schedule. There's a separate schedule, but practically we see that there is no any requirement to submit these schedules because SVAT 4, SVAT 2 and SVAT 4 will come up with all these things. This is actually kind of duplication of things. Anyway, as per the law, still we are required to submit this 5 and 7, but we have already made a request from request to IRD to remove these things. But until such time, we need to submit this schedule to IRD. There's a question: when the local budget is 300, VAT amounts 24. In such a term, we have refund. Exactly, Kanishka. Then if you have 300 local purchase, if you have, I'll share it again. In this case, I think you are referring. Here, if you have 300, then the VAT is maybe 24 here, right? 24. Then you can enter the 24 here. You can enter the 24 here. Then anyway, you have the credit voucher here. Then you can deduct this 8 million and the 24 million. Then you will end up with refund is how much? 8 million. You will end up with refund 8 million. Hope you understood. Okay. Yeah, actually, the calculation is, the slide is very useful. You can put here and there whatever the number you want. Then definitely you will get exact the theory behind that. If you have any concern, you can share your questions in the group also. SVAT 7 is the other document, is a summary of, based on the credit vouchers we need to update and upload to the IRD system within next month, by end of next month. That means, let's say January, you are the taxable period for SVAT. Before end of February, you are required to upload to the system. in practically we had a grace period of 6 months because IRD soon after they enter into the PAMI system from 2016 January onward, they allow allow to RISs and RIPs to update the schedules and get approval and do the upload the schedules and all things. Maximum they allow up to 6 months. Then the going forward from the recent news is going forward with effective from November 1st, 2020 onward, you will not get that grace period, 6 month grace period. Now again, you have to submit the schedules and do the approvals and upload to the system within next month, before end of next month. You need to get approval and upload the schedules also. Then in the case of RISs, their return filing is quarterly return. They have quarterly return filing requirement. We discuss how to file the returns, due date and all. So they have to file the return quarterly. Then in the case of RIP, here RIP, in the case of RIP, sorry, let me share the screen again. In the case of RIP, here it should be RIP. Hope you can see the screen again. This is RIP. Right. Here again, in the case of RIP, there is a month again. They have to comply with monthly obtaining credit voucher. They have to obtain credit voucher from IRD. Monthly compliance we have, because in the case of RIP, monthly compliance, they have to obtain credit voucher from our IRD. Then they are required to approve a SVAT for online. But they have entered into the system, they have to approve. Then the date is within 20 days from the end of any calendar month. Within 20 days. That means if it is January, before end of February 20th, they are required to approve all the purchases by allocating credit voucher number. And then SVAT 6, RIP is the most powerful person in the case of SVAT, but and also they are very they have only very easy task. They need to collect the credit voucher, only three things. They need to approve the system and upload SVAT 6, the summary of approval purchases, SVAT purchases, because these three only. Again, this is kind of duplication things because this SVAT 4 contain all the detail. And here, the one additional burden is, if you register as RIP, you are required to file VAT return monthly. Then if you have any RIP, definitely they are submitting return monthly. Then there may be some few cases where they are submitting return quarterly. Other than that, all RIPs, they are submitting return monthly. Why the returns are submitting monthly? Because if they make any purchases without under SVAT terms, they will end up with refund situation. In order to get refund situation, because in order to reduce the cash flow burden, then they are requested to file the return monthly, and then they can claim refund quickly. That is why they are filing return monthly. Then how refund is arise? Basically, if normally as per the SVAT law, RIPs are requested to make purchases from RISs. Normally they are requested. Yes, as per the law, they are requested to make purchases from RISs only. If there are any circumstances where you don't have any RIP, there is some special requirement to purchase this, let's say one item, that person, it is very urgent because we can't wait until they register as RIS, then we need to purchase. If we purchase normal VAT term, then they can obtain a refund. Then if here is the, if it is purchase who is not registered as RIS. Then if you import any goods without taking deferment, paying tax upfront, then you pay VAT to the custom, then also you can obtain refund from import point of view if you have purchased. So this is the basically refund will occur even if it is registered for RIS and RIP, or if you register, even if you register as RIP basically. So then again, the end of the session for SVAT, here the basic, the penal provisions. Penal provisions is you need to aware as the practitioner if you are dealing with SVAT. Then in the case of RIS point of view, issuing suspended tax invoice, suspended tax invoice is important for RISs if they have registered for SVAT as RIS, and then they need to enter the SVAT 4 to the system, and again they have to update the schedule SVAT 5, SVAT 5A if there is any credit note and debit note, and the SVAT 7. Then the penal provision, if they negligence of supplies, if they do not comply with these issuance of SVAT credit vouchers and the SVAT schedules and form, if they do not comply, then that suspended supply may be deemed to be a taxable supply. The penal provision is. Then if it is deemed to be a taxable supply, then they have to pay VAT on that supplies. I will explain in the whiteboard. Here, let's assume if you supply 100 SVAT as RIS suspended supplies, let's say SVAT supplies means sales, right? You know, supplies. Let's say you have 100 million, then the under suspended terms, SVAT amount percentage is 8, then the 8 million you have. Then you just declare as SVAT supplies, but you didn't enter into the system and you didn't upload any schedules. Then finally you will not receive any credit voucher. Then as a credit you can claim, you know, that if there is a supply, you will receive credit vouchers. But in this case, you will not receive any credit voucher since you have not complied any requirement as a RIS. Then you didn't receive any credit vouchers. Then the penal provision is this 8 million they have to pay. 8 million is payable because they don't have any credit vouchers. That payable. Even they declare as a suspended supply, then there is a VAT payable because they don't have credit voucher. Why they don't have credit voucher is they didn't issue it. One case is they might not issue a SVAT invoice. One case is they didn't enter the SVAT code to the system, and also they didn't enter the relevant schedule to the SVAT system. Then they will end up with VAT payable again. because they don't have any suspended credit vouchers in order to set off that. Then again, the penalty. Penalty if you didn't pay this 8 million, then again the penalty maximum is up to, maximum is as per the VAT law, 100% penalty is there. Then additional 8 million you have to pay. Altogether 16 million you have to pay, including penalty. This is the another penal provision. Then the next one is RIP. Sorry. Then next one is RIP. This is penalty. And then in the case of RIP, in the case of RIP, not approving the SVAT 4. Normally RI will enter into the system as SVAT 4. They are required to approve that SVAT 4, and also they are required to issue credit voucher. And also they need to upload SVAT 6 to the REMIS system. Then if they not complied anything here, not issuing, not approving SVAT 4, not issuing credit voucher, not uploading any SVAT 6, then they are not allowed to obtain any purchases. Normally administratively they see that they need to approve 75% of the suspended purchases. If they not approve, IRD will not issue credit vouchers. Then again, if they do not comply the above things, IRD will issue assessment. Basically 8A is the case. They will disallow whatever the purchases they made under SVAT terms. They will disallow. That means again, disallow means you have to pay VAT. If they declare that is suspended purchase, but department has power to disallow that one under cage 8A, and they will disallow that amount, and they have to pay VAT on such purchases. Then if I am sharing the VAT return, let me share the VAT return with you. Here is a sample VAT return form. This is the specimen, the VAT return format, not actually specimen. This is the actual VAT return format. Then here, whatever the suspended purchases, you will declare here. You will declare here as a suspended purchases. But if you not comply the procedures, uploading schedules and approving this, they will disallow all the suspended purchases. Since it means disallow mean, then you have to pay VAT. Right, and here I will highlight because I just opened the VAT return. I will highlight what are the relevant cages for SVAT point of view. That this is SVAT. If you register as RIS, you are required to declare here SVAT supplies, and the value is 100, and the VAT amount, let's say 8 million. Then whatever the purchases you are going to make under SVAT purchases, you can declare here. Then whatever the credit vouchers you receive, you can declare here as a tax credit. You can declare here. Then as R2, you can declare here. And you will see the this is the normal SVAT implication. Normally the cages you are required to refer in the case of SVAT. Let me share the screen again. And also if RIP let's say just assume your company is registered for RIP and you are not complying with the SVAT requirement, you are not approving on time, you are not issuing credit voucher, then if other party can complain to the Commissioner General, Commissioner General will blacklist your RIP registration. Commissioner General can cancel your SVAT registration as RIP. Then you cannot enjoy the SVAT. Then again you have to purchase under normal VAT thing, and then you will end up with refund situation, and you will never get such that refund. That is the penal provisions. Then this is the end of the SVAT things. Now we are going to discuss the final part of VAT session is VAT administration part. VAT admin, I'm sharing the slide. Hope you can see this screen. The final part. Is it visible to everyone? This we have few slides to discuss within 20 minutes. Is it visible? Hope it is visible to everyone. Can anyone help me? Yes. Okay. Then right here I'm going to discuss again the VAT administration part. Here the VAT administration part basically in the case of VAT admin part, when we are going to discuss, we main important area is assessment, notice of assessment. The assessment is basically what is you received from the Department of Inland Revenue soon after you file the VAT return. Let's see this. The Assistant Commissioner of Inland Department is empowered to assess VAT return filed by the taxpayer and issue a notice of assessment. Let's assume you file the VAT return, let's say by mentioning 100 million, but department people can see, no, you have declared erroneously that amount should be 200 million. Then they can issue assessment. No, your assessment is wrong. The self-assessment, that means self-assessment is wrong. Then the correct assessment is 200 million. Then you need to pay balance VAT amount, right? That is the normal assessment procedure. The assessment can be issued on the following circumstances. First circumstances is any registered person failed to furnish a VAT return. Then if you couldn't file, let's say for the one period, 1 quarter, or else your taxable period is 1 month. If it is 1 month, then let's assume you didn't file the VAT return. Then in that case, the commissioner can issue assessment by saying, by mentioning your taxable supply is this much, you need to pay VAT, right? If it is failed to furnish return, right? Then any registered person file the VAT return in the taxable period, but fail to pay. Then again, if it is failed to pay, then again assessment, you will be received an assessment if it is if you not paid the proper amount you declared in the return, right? Then any person request to make any alteration or addition. If there are any alteration or else addition to return furnished such person is again you will receive an assessment, because if you make let's assume you declare 100 million, you want to correct it as 150 million or 200 million, then you you normally what you do is you will submit the VAT amendment VAT return. Then in order to amend the return, system will automatically generate the assessment in the case of in order to alter the previous amount, or else we call it as addition, right? Then where the opinion of the assistant commissioner, the amount paid any taxable period less than the actual amount payable. The assistant commissioner assume that you paid that anyway, but you have paid less than the actual amount. In that case also, you will receive an assessment. Let's say your VAT paid is 24 million. You paid 24 million, but actual amount as per the law, it should be 32 million. Then again, you will receive an assessment in the case of 32 million by adding that balance 8 million, right? Then the assessment should be made by the assistant commissioner within the time limit given as per the VAT Act. Then it is called it as time bar period. The time bar period is very important in the case of taxpayer point of view. As per the VAT law, time bar period is 3 years. 3 years. Then the time bar period I will discuss as example. Before moving to that, I'll share in the case of assessment, they will issue an assessment if you not file, or you file and fail to pay, or if there is any alteration. Then if it is actual amount, paid amount is less than the actual amount. In these 4 cases, you will get an assessment. And again, let's assume you have properly submitted a return, including all the things. And then again, there is a grace period to department people to verify those figures correct or wrong. Then they have 3-year period to check whether you have declared the supplies properly, you have claimed the input properly. They will check those things. Then they have 3-year period. They have to do audit all the VAT return within 3-year period. Then because in the practical circumstances, due to lack of employees in the inland department, they are unable to do each and every VAT return for all the persons. Therefore, they select in higher volume of companies, those who have high transaction. Then they will start audit. But the 3-year period, they have to do the audit and check whether they have properly complied with the tax law. Then if the taxpayer is filed a return on or before the due date, let's assume taxpayer has filed a return on due date, and assistant commissioner make an assessment or additional assessment from the end of taxable period. From the end of taxable period. I will share in the whiteboard again. From the end of, this is the example. As example, VAT return for the quarter ended 31st March 2019. This was due to file on or before the 31st January 2020. Then they have filed the VAT return for the quarter ended 31st December 2019. They have filed the VAT return 31st January 2020. Right? Then if taxpayer has filed the VAT return on or before 31st January 2020, assistant commissioner can issue an assessment for such return on or before 31st December when is the question. Normally, we need to count 3 years. Count up 3 years from the date when. from the date is when is very important. The time bar, the examiner might test the time bar by giving the taxable period. By giving the taxable period, then how to decide the time bar start from when? Then the 3 years from the end of the taxable period. From the end of the taxable period. Right. I'll share the whiteboard. Again, the end of the taxable period. Here, let's see. This is the timeline. In this case, your return quarter is, I will take the example as it is given in the slide. The quarter is 31st December 2019 quarter. Here, basically Q4 2019 Q4 2019. That means October to December. This quarter. Then this quarter, they submit the return by complying the relevant due date. It is basically the 31st or no before, say 31st January 2020. They submit the return on due date, right? Then let's assume the time bar. You have to comment on the time bar when the time bar start. Then until such time, department people can issue an assessment. This is the only point in that admin part is very important point you to understand when the time bars start. Here, this date is important. You need to comment when the time bar start. Here, when the date. This period, department until such time, department will issue assessment. They will do the audits and anything during this period. They can do audits and all. Sorry. Here, this period, they have 3 years. I'll mention here 3-year period, 3 years. 3 years. Then, when is the last day to issue an assessment? After that, they cannot issue an assessment because time bar start. After that, they cannot issue any assessment from this date onward. The time bar start from this date. Then when is the last date? Then 3 years starting from 2020 December, 2021 December, 2022 December is the last date. The last day is 21st December 2022 is the last date. Then the 3 years, because 2019 31st is the December is the last date, not the return submit date, because income, because I highlight this, most students are misunderstand because of the income tax time bar start from the return filing date. In the VAT perspective, time bar start from the day last day of the taxable period, then the end of that quarter. Then the 31st December 31st December from this date, 2020 December, 2021 December, 2022 December will complete the period. Until this time, department people, they can do audit. They have time for auditing because 3 years basically. Time for issuing, let's say, assessments. Then after that, no time for assessment. No time for assessment. I put the short word assessment. ASMT. No time for assessment from this date onward. Then the date is from when is with effective from 1st Jan 21st Jan 2023. Right. I'll share this one also. Then moving to the slide again. The time bar. Again, the important point, time bar will not apply. Time bar, that 3 years will not apply. What is the case? Like this lady is worrying, like you also will worry, that time bar will not apply. What are the cases there? The VAT return is not filed, not being filed by the taxpayer. If you not file the VAT return, then no time bar is applicable. Anytime assessor, the assistant commissioner can issue assessment, right? Then just assume if you file after the due date, if you file after the due date, then the due date is 31st January 2020, you file February or May, March, April, subsequently you file. Then again, time bar will not applicable. It is open for IRD to issue an assessment. So then the third point is assistant commissioner is of the view that willful of fraudulent activity. If it is willfully, you declare the less turnover because of you have to, because of you need to declare a lower amount in order to gain on behalf of you. You pay, you declare on a detail. Let's say you have 1 billion revenue, you declare only 500 million. If you declare a low amount willfully, then definitely no time bar applicable. If IRD realize at any point, they will issue an assessment. These are the 3 points which time bar will not apply, right? Then the appeals. Appeal in the case of assessment you receive, then what you do is you have right to appeal. This is also as per the VAT Act. There is a right to appeal if you dissatisfied with the assessment issued by the assistant commissioner, right? Then the appeal should be made in writing or electronically within 30 days. Normally, as per the law, you need to appeal after you receive the assessment within 30 days. In the practical scenarios where sometime due to postal delay, if the assessment date is 1st January, you might receive, let's say February, or else let's say January 20th, or else even February. Then the date is January 1st, you receive in February. Or there are some cases very recent past happened that due to COVID situation. They have a number of cases where they issued an assessment as per the system, but taxpayer didn't get. So then there is a practical solution where they are not referring the 30 days period anytime the taxpayer is allowed to issue, allowed to appeal. It is the practical solution they have given recently. The before that and the going forward, whatever the assessment they issued, within 30 days from the date of assessment, you need to reply. You need to appeal. Is the first condition. If you not received the within 30 days or else you receive little later, then normally soon after they made an assessment, then they have 16 floors. Then if it is assessment made in 14 floor, then the ground floor, when it is reached the ground floor, it will take time 5 days, let's say 10 days, because there are so many staircases. Then the letter will take time to go to the postal department of Inland Revenue, right? Then it will get anyway delay from their point of view. Again, then the assessment date is 1st January. I will share the whiteboard and explain you again. This is also very critical in the VAT law perspective in the appeal. In the case of appeal, see, your assessment issued 1st January. Let's say assessment issued 1st January 2020. Then 1st January 2020 they issued an assessment, but you received that assessment is on you received it 20th January. Then then what we have to do is we have only 30 days to appeal. The 10 days, if you feel like 10 days is not enough, if you can comply still within 10 days, then that would be fine and great. Then if it is not enough to get some information, because you don't have that information with you, you need to get from archive, and there are some information you need to get and visit IRD, and you need to observe those things. Then what you have to do is, then you receive this 20th, but again then from this date you can count 30 days from the receiving date. Is it receiving date are you going to count? No, you receive the date is 20th, but even though you receive 20th, we can't take that date. As per the law, you have to go back to the assessment date. But as per the case law, is a case law, and the approval department is granted whatever the postal date, postmark date. Basically, anyone can mention the receive date, whatever the date you willing to. Normally, let's assume the 20th. If you receive even before that, you can say, nah, I received 20th or something like that. Then again, as per that case, they decided, no, you can't take the receive date and the 30 days you count. Therefore, they said that they can't go from this date to this date, 30 date. Then as per that, they said you are required to go from the postal date. From this date, then let's see, when we see the postal date, normally in the department letter, if you have received such kind of letter, then there is a black circle date, which is pasted by the postal department. It is 18 January 2020. Then from this date onward, you can count 30 days. Then you can count 30 days from this date. Here, then 30 days, you can go from this date onward, 30 days. Then you can appeal against the assessment from the postal date onward. You can go from with this date. Here 30. And this 30 days, you cannot. If you say the receive, no, I received this date. But you cannot go under this. There are some trigger scenarios where the postal date, there are some instances, postal date, you cannot clearly identify, it is blurred and cannot read. In that case, there is a number, the mentioned in red, then you have to go to the postal office or else back to department and identify what is the exact date, postal department date. So this is the practical aspect in the case of assessment point of view. Then we'll share it again the screen. The 30 days scenario also. Then if there is any practical difficulties, like if you sick or there is an out of country, then the taxpayer, if it is other reasonable cause, the maybe COVID situation, then the Commissioner General can grant additional extended time, not the 30 days, based on case by case, right? Then the valid point is, again, when you are making an appeal, it is important to have these criteria in order to become a valid appeal. You can make appeal, but it is not a valid appeal if you miss anything out of below, right? Appeal must apply under the condition mentioned. Right, first one is appeal should be in writing, or it may be now even electronically under the premise. Then, and also the next condition is within 30 days from the date of assessment or the postal date. And it is, you are required to clearly state the grounds of appeal. Then this is the reason why we are not accepting the assessment. This is why we are not accepting the assessment, saying that valid ground. Let's assume assessment, they have issued an assessment by including additional 100 million. Even though you declare 100 million, they have issued that by including additional 100 million. Then you have to say, no, this is not the case. Actual amount should be 100 million with the valid ground. Then there may be a bad debt occur, and then again you need to support how the bad debt is come with the bad debt supportings and any other document internally in order to prove that bad debt. So that kind of things is required. Then the grounds of appeal is very much important when you are making an appeal. So then, in the case of absence of return, if you not file a return, if you received an assessment, then you need to submit the appeal by attaching the return format and also the proof of payments and the payment slip. That means, and there is a penalty requirement also, you need to pay that penalty, and that confirmation also you are required to attach when you are making an appeal. Then again, the taxes must have to pay it as per the return with penalty. However, the CGIR grant an extended time. Normally, the Commissioner General can grant extended time if it is there is a serious financial hardship. If it is due to COVID situation, maybe they cannot pay the entire penalty and VAT, the taxes. Then you can take an excuse from by discussing after discussing with the Commissioner General. If they allow, you can do so. Any other reasonable clause. Then every petition of appeal was not made within the period specified. That means the 30 days. Then or not complied the above condition. That means these are the conditions. Not complied. Then it not be accepted as a valid appeal. Then it will treat it as invalid appeal. Then keep in mind when you are making an appeal, these things. And also examinable point here. Then the appeal settlement procedure. Again, appeal settlement procedure. Once an appeal is made, once you make an appeal, then again the procedure is settlement process is. Then even once you submit an appeal, you can't wait. Then it goes to the appeal hearing unit basically. This is important to understand the procedure. Basically, first one is appeal before the assistant commissioner. Right. It is basically soon after you submit the appeal, receipt of valid petition of appeal, the department, CGIR may cause further inquiry. Then there may be additional information. Even you submit that this is bad debt actually. Then you need to prove the supporting. If you not file the supporting with the appeal, then department people they will make a request for additional document. Then the assistant commissioner, other than assistant commissioner who made an assessment, normally if the assistant commissioner who issue assessment, they will not come to appeal hearing process from the beginning. The additional any other person who is appeal hearing division, they will start appeal hearing process. If they see there is requirement to additional document, they will call additional document. And this is inquiry. During the inquiry, if there is any agreement reached, then the appeal hearing unit, then you will go and discuss with the appeal hearing unit commissioner and the assistant commissioner. Then you can reach any agreement matter is specified in the petition agreement. Necessary adjustment shall be made. Then if you realize that, then you declared 100 million, then department also say another 100 million is there, but you say that bad debt is there's a bad debt 100 million. So department says no, you have only 50 million bad debt. We realized from that document auditor's report. Then you have to pay 50, additional 50. Not the assessment says, even assessment says 100. You have to pay 50. Then that agreement, then the 150 is the agreed amount, both party agree, and you pay the balance 50, VAT on the balance 50. That is one scenario. Then the second one is if no agreement is reached. If no agreement is reached, the Commissioner General hearing. Then the appeal unit, you didn't agree, no, I am not going to pay that 50. Then that should be 100. I am not accepting. That taxpayer is not accepting to pay balance 50 even. Then the appellant and the assistant commissioner, as discussed, the CGIR shall fix a time for hearing. Then the CGIR will fix a time for CGIR hearing. Because normally the lower persons, the department people, they will hear the appeal. If there is no any agreement reached, then refer to the Commissioner General, the higher level of the internal department. Then the Commissioner General has power to determine the appeal. Then he will confirm and also reduce and also increase or the cancel the assessment. And also he will issue a letter in writing his decision basically. Then the Commissioner General hearing is the final one at the point of department. Then he will see the assessment and he will ask, no, this is 200, you need to pay. Or he will reduce 50, 150, they will reduce 120, Commissioner General. Or Commissioner General will increase additionally, no, not the 200, 250. Likewise, or else he can cancel the assessment even. He can cancel the assessment, right? Those things are happen. Then the Commissioner General is the one, then he will take the decision finally. He will take the decision and he will issue a determination saying that this is the final decision as per the Inland Revenue Department point of view, right? They will issue a final determination. Then the normal agreed time for the determination for the Commissioner General is 2 years. If the Commissioner General not hear any assessment within 2 years, then the appeal is final. Appeal is final. If you let's say that there is an assessment, you appeal to the Commissioner General, but Commissioner General didn't hear the appeal unit, and also the Commissioner General didn't hear. They didn't add to that appeal. Then it's deemed acceptance. It's treated as a deemed acceptance of appeal. Then they decide that assessment appeal is accepted. Okay, you say it is agreeable. Department people, like we can think the bad debt is 100 million. They also accepted. Then our as appeal is final and conclusive. Then they have time bar again 2 years period. If it is not come back within 2 years for our appeal, then appeal is final and conclusive. Right. The let's assume here the Commissioner General give the determination. Commissioner General give the determination for our appeal, but still you not satisfied. Commissioner General still says that the 200 you have to pay. We have to pay. Then what we have to do is, normally if there is a fight with brother and sister, or else younger brother and elder brother, normally what we do is we have to mainly we talk to the parents, talk with parents. Then the parent, if they are not give proper solution, what we have to do, we are going to the grandparents. Likewise, if the IRG is CGIR, normally assistant commissioner and taxpayer is fighting here, then they are not giving solution, we go to the Commissioner General. Commissioner General is again not giving proper decision. He also saying the same word. Then what we have to do, we have to go to the grandparents. Those are the most senior person, experienced person. That is called Tax Appeal Commission. Tax Appeal Commission. Then Tax Appeal Commission is the persons outside Inland Revenue Department. If you disagree with the assessment determination given by the CGIR, that means the parents' decision, then you need to appeal to the that determination to the Tax Appeal Commission. We call it as simple wording Tax Appeal Commission. You can again appeal to the Tax Appeal Commission as per the Tax Appeal Commission Act number 23 of 2011, and related to appeal accordingly. Then the appeal made to the Tax Appeal Commission shall be determined within 270 days from the date of commencement of hearing of such appeal. Then the first hearing onward, they are limited to, they have only 270 days from the first hearing, 270 days to determine the appeal. Then they will hear the appeal. There are number of board persons to determine appeal. Then if you willing to have more detail, you can refer the Tax Appeal Commission Act. Then again, if the Tax Appeal Commission also not able to give a proper decision, and also they confirm the same thing, because most of the tax appeal people, commissioners, tax appeal commission represent the IRDP. Then because this most retired person from the Inland Department will, we can see there also. Then they always take in the department view sometime. Then if they not give proper decision, we have to go back to the Court of Appeal. Court of Appeal, we can go if there is a frictions of law, basically. Then the decision of the Tax Appeal Commission is final. Normally, in term of VAT tax, it is final. But however, you can make, taxpayer can make application to the Court of Appeal. Basically, if there is a rate of ratio RI, that a question of determination, then it is basically frictions of law. Question the determination means there is a friction of law. The law is not clear. Then the law has some ambiguities, the loophole. Then you can go back to the Court of Appeal. Then you can take a writ. The law, writ means we call it as avnyav or writ of ratio RI, is you can take from the Court of Appeal, and you can take as a case law, which is determined if it is a frictions of law. Then the finality of assessment is the last slide we are going to discuss. The finality of assessment has made or reduced, increase or confirm. Basically, if it is reduced or increased or confirm, assessment as made, if it is treated as same. Then on appeal, shall final and conclusive under the following circumstances. Let's assume the assistant commissioner has issued an assessment, then the taxpayer didn't reply to that. Then even no appeal has been preferred within the specified time against the assessment. Then if you didn't appeal or else not valid appeal in the within a specified time period, then the assessment will be final and conclusive. We have to anyway pay the balance 100 million also. Then where the amount tax has been determined on the appeal, tax has been determined on the appeal. Then the appeal also we apply, we accept in that, yes, that 100 million we are accepted to pay that 100 million. Then again assessment will be final and conclusive, because the assistant commissioner, we accept that assistant commissioner is right. We erroneously declare 100 million, but it should be 200 million. We will pay the taxes and penalty. In that case also, assessment will be final and conclusive. So, hope you understand the all theoretical part, including the calculation we discussed in the slide, VAT perspective. If you have further queries, you can come back to me through the group, or else you can text or else email. I'm willing to reply to you any questions on this in this regard. We are planning to do the non-resident taxation part. We'll see in the next session. Thank you.